The concern I have now is, let's take the tech sector, for example. I need to hear what the new forecast is going to be in earnings for 2019. And I see some things I don't like. We can't talk enough about Apple, but just finished hitting Europe, Asia, and South America and Africa. I didn't see any Apple phones there. I saw Huawei's killing it. I'm worried about the competition and margins in this big sector, and I think we're going to see more bad news out of Apple. We're going to see more chip bad news. I don't like tech, and I think tech's supposedly going to be a new driver for the year. I'm not sure it's going to happen.
Shannon, what do you think? Do you agree or disagree with Kevin?
I agree to some extent with Kevin. I think that there are a number of things that we're looking at. We still don't have a resolution as it relates to China. And so if we go back to last quarter and the negative sentiment that came out of earnings reports, they're really around the uncertainty with China. I think that still exists. We do have the Fed, move to a simmer from a full boil. But I do think that over the next couple of weeks, we need to hear the tenor of these corporate management.
Okay, so bottom's not in, times 2. What about the rest of the desk? What do you think?
I think we're really close. If we hadn't already put it in, I mean, but with us on the low end, the smart money, I guess, I should be saying, well, the bottom's not in, because we're so close on the downside to the bottom that we did put in that why wouldn't you say
you think
it only takes a couple percent drop?
Biggest risks were the Fed trade, right? You think the Fed is removed as a risk, or is it still there?
I think the Fed is still there, but not in nearly the same to the same degree.
So
Scott.
why don't you think the bottom is in?
Overall, I do. I'm just saying the smarter money is probably saying that it is not. And
there's no smarter money than you.
Well, there might not be.
Don't be so modest.
That's the name of our book. But so, for instance, here's a couple good tidbits, Judge. You've got a stock like Mattel. Friday it was up almost 13%. Today it's up almost 10%. Double bottom and a 20% short interest. There are stocks like that out there that I'm trading, and I'm sure that a lot of the viewers are trading, that have great potential, and those probably are already at bottom, a week ago or so.
Well, look, Mattel is a good example of a stock that's moved double digits off of its low. Percentage points, right?
Yeah.
Kohl's
2 days in a row.
Kohl's is up 14% from its low. MGM up 20, GE 24, Netflix 33, Amazon 18, Facebook 11, Google almost 10. I mean, you've had some stocks make some nice moves.
Chipotle 23. I bought that one this morning on the strength of the U.S. consumer.
Sucker moves? They're sucker moves?
I think the bottom's in, and I think the top's in. So you could digest that for a little bit.
Okay.
But I said on Friday,
so we're going to be in this range of what?
I said Friday I thought the next 50 S&P handles were going to be higher. I still positioned that way. I still believe that. I think the credit markets are incredibly important to this conversation, although people think it's boring. You have to look at what's going on high yield and leveraged loans. You're seeing spreads react in a way that indicates that probably you're going to go to the upside before you roll back over once again. You're getting oil prices approaching 50. But again, I think overall we're in a range. If you're looking at your portfolio, you want to use the range that we're in to rebalance at certain times from an opportunity standpoint. You had that opportunity in emerging markets a while back. Continue to be diversified and just view this market as a sideways market.